2021 will confront us with a number of new challenges. And I think we should all be considering having an advisory board as part of the answer. Hello, my name is Paul Raftery, and I'm a director with Projects RH based in Sydney. In my early years out of university, I worked in macroeconomics. And about this time each year, I would send my forecasts not only to our clients, but to the metropolitan newspapers. My forecasts were pretty much like everyone else's, and I got as many right and wrong as other people. But what we were able to do was stop and take action. What it did was a time of year where we sat back and said, how are our predictions going and should we be adjusting the portfolios? In 2019, we prepared our business plans for 2020. So in Q4, we were all busy trying to understand what currency rates would be, what the bank would be charging. We weren't ready for what happened in Q1 of 2020, nor was anybody. And no analyst can be blamed for not predicting it. But 2021 will be filled with challenges and, more importantly, opportunities. Over the last 6 months at Projects RH, we have been working with clients getting ready for what confronts them, the challenge being to seize the opportunity. We're now being told this week by commentators we're technically out of the recession. Whilst that may be true for the large organisations, many medium and small businesses don't agree. They're still being very tight. They are still managing cash, and they are still very concerned about the future, and in particular, how they're going to meet their costs over Christmas and New Year. The reality is they need to be addressing what will happen in Q2 next year. And many of them are. The really smart ones we're working with are down the track and understanding that's where they need to be. What's happened is the world has changed. We've been in a relative bubble and we're coming out of it, and particularly so in Australia. And we've been very fortunate compared to much of the world. What we will see is continued outsourcing. We're going to see people focusing on what they can and can't do. They're going to deliver, and they're going to look at how they deliver. We will see an increase in the use of the gig economy labour style. We're seeing it across the professions already, and quite frankly, we're being asked to do jobs that we never expected to be asked to do, and just do them as a one-off. I see advisory boards filling a very important gap for many of our clients. Some will argue that they are expensive, but I think not, because when they're finished, they're gone. There are no termination payments. They're just gone. The key to having an advisory board is they have a mandate. They have an agreed function. When that function is complete, they're over. They may come back and do another function, but they are finished. So the cost is known. Advisory boards are generally also paid on a monthly basis a service fee. So it's not in their interest to have excessively long meetings, nor to produce excessively long reports or rewrites, because they've got Y months to do the job. So what's important in appointing the advisory board is that their charter is clear and whom they report to is clear. That charter needs to say what the outcome is. So really, an advisory board is there to act in the best interest of the company, because it needs to get the short-term answer. Consultants, unfortunately, have to worry about best interest, making sure they cover all the points and contingencies. Critically also, an advisory board doesn't have to worry about the general governance of the company. That's something for the board. So what we are seeing now is boards are very much focused on compliance, accounting, and more compliance. So the board doesn't have time to seize initiatives, work with the CEO. Our CEOs are probably spending a third of their time with clients, a third of their time working on the business, and a third of their time working with investors and the board to ensure that everyone understands what the company is doing and the opportunities. For most of our clients are early stage companies and they're developing new products and services. So they're growing other things. Their focus is not only in Australia but international. One of the common themes is management can only focus on so many things. They have too many tasks, things get lost. So what they are saying is they have a number of projects they can't do, therefore they're going to sell them. So we have this divestment market. So our prediction is for 2021, we will see companies restructuring. What we're also seeing is a lot of the 80-20 rule. 80% of the activity only generates 20% of the bottom line profit, whilst 20% of the activity generates 80% of the benefit to the company. Naturally, management and the board want to focus on the latter. So there is a urgent view that some things need to be divested. We're also seeing that the currency at 72 cents plus a bit means that investment by Australians overseas is attractive, but manufacture and selling overseas is not. So we are seeing a definite impediment to export. Let's look at Omega. Omega is a theoretical company that has three products, A, B, and C. Product A is 20% of the business but generates 80% of the bottom line. So naturally, people want to invest more in product A, and therefore they're looking at divesting products B and C. In our case, we know of one of these, and they have appointed an advisory board to assist them in setting up the criteria and appoint the people to do the divestment. In our case, they are a lawyer, an accountant, and somebody who recently retired from a competitor because they know the business and they know the business globally and they speak a couple of languages. But Omega will probably focus on selling these divisions off to people in North America and Europe or in Asia. So they know the industry players and what they work in. The advisory board has a very precise role to play. And we have, at the same time, Omega has a second advisory board. And it's doing something really simple. They're advising on procurement of a new accounting system. The CFO is incredibly busy working with the growth and change of the business, assisting the CEO with raising of capital. They have the ability to get an advisory board which consists of experts who have issued criteria to a corporate advisor who's going through the accounting systems. What will come back is a recommendation from the advisory board as to the interpretation of the report and an implementation program. What is done is relieve the CEO and CFO of the obligation to be involved in an important but not strategic decision. So what do we see 2021 like? We see it as a time of change and an opportunity for good companies to grab the change. They actually need to have the top team out there doing the change. And by doing the change, they're setting the criteria and getting the mechanics in to lead. An advisory board, by its very nature, is there to filter the information and respond. I'm actually seeing that we're involved with advisory boards, and I'm being asked to give advice differently to the way we do at Projects RH. What we're being asked to do is to come through with very simple recommendations. Yes, the project reports are prepared, everything is there, but what the advisory board is cutting through and saying to management, look, we've read everything, you know us, you've respected us, you appointed us, we think you should do this. And say in the case of applying an accounting system, that's what's going to happen. The board has already said, we believe in these people. Thank you, Mr. CEO. Please proceed. So what's important is the cost savings and the fact that together people can see 2021 as a massive opportunity. The divisions that are sold will be better off in the hands of the people they're sold to. And so they will be given the opportunity to prosper. And the money raised will be used to grow, in my case, Project A, and lead to greatest value for shareholders. So stepping back and looking at the role of the CEO and of the board, they are achieving what they're there to do, achieve value for shareholders. The advisory board is a means to an end. It's a cost which disappears after the service has been provided. Well, going back to almost 20 years ago, I was happily predicting exchange rates and interest rates to 1 decimal point degree of accuracy. But what we're doing now is we're working with companies on their destiny. What they're seeing is that they need to act. We will see, based on Australia's relatively well outcome of COVID-19, that we are able to move quickly and move internationally. What we need to do is have the right teams and people in place to achieve what needs to be achieved. We are seeing many Australian companies putting into action the use of advisory boards to get them ready now for Q1 2021. We expect that not only will 2021 be full of challenges, it will be full of rewards. What we are seeing from the return of the Australian economy is we have the opportunity to lead this globally. Thank you for your attention. My name is Paul Raftery and I'm a director with Projects RH based in Sydney. Ladies and gentlemen, goodbye for now.